Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning and welcome back to Become Sensible, where we discuss all things entrepreneur, business, finance, accounting, and tax. And today we talk about a very special case, and it is about the thing that make or break a business, that is cash flow. And that's why I welcome back to my co-host onto the podcast.
Hello, everyone. It's great to be back. So our case for today, we're talking about an e-commerce business who are doing pretty okay revenue-wise, but they're constantly struggling to maintain enough cash on hand. So they've got like delayed client payments and they need capital upfront in order to fulfill some of these orders. And pretty unsure on how they should be managing these recurring cash flow like gaps within their process. So why do you think so many businesses struggle with cash flow even when they're profitable?
So I think it's very interesting when you say that it's profitable. So the profitable is very important concept because if your business is not make the break even, that just means that you will never actually have extra cost underneath of your profit and loss report at all. But if you have an extra cost, it means you make a profitable underneath of your revenue after all is spent. You make a net income on that. That means you're supposed to have extra cost. But the thing is, from the revenue and it's spent and net income is flow into the cash flow in like two situation. So cash need to come into your business when you sell the product or service. And then you need to pay out for your employee, for your supply, for your vendors, for every expense in terms of operational expense too. That's called cash outflow. So whether you can convert that revenue coming in on time and the cash coming out relate to your expense is in the mass of the flow of cash, then you will be fine. But if your revenue coming in slow, but then the expense is be coming out faster, then you have a problem. That is why there's business like gets 1,000 order, which is like should be like amazing thing. But then they don't actually have a cash to fulfill, because when you want to fulfill the orders, you need to pay for your suppliers, your vendors to like get all this material, especially in the product base and e-commerce space. Is require a lot of cash to get this thing going on.
Yeah, to actually start manufacturing some of these orders, you do need like a big chunk of cash when it comes to an e-commerce business, right?
Yes.
And so like, if you got like a big chunk of money coming in at the end of the month, but all your bills are due at the start, how would you say you should be dealing with that type of situation?
So this is one of the things depends on the model. So one of the things in e-commerce, if you do with the wholesale is like, for example, if I want my product to go to Nordstrom or go to like Macy's, like go to these big retailers that you put your product in, people don't understand that going to these wholesale place, you actually need to manufacture product and put on the sale at the retailer. Without get the money paid back to you until like maybe 45 days later. After the item was sold, depends on the term. And the bigger of the retailers, the term sale is like more complex too. So that's why you need to have a balance of your revenue channel, which is like maybe you direct sell it to your consumer so that cash can be deposited on next day. Not waiting 45 days to actually get that money deposited to your bank. So that is why people say that if you want to go to wholesale, actually need cash on hand a lot, because you basically like you lend the money to these big companies. Big company, which is strange, but like
Yeah.
That's how business works.
Yeah.
So if you decided to go into this, it needs to be like smaller portion of your revenue, your cost. And you may need to do like direct sale to your consumer right away, so you get that money coming in like faster.
I agree. Yeah.
Yeah.
I think figuring out that like cash flow pattern for your business is super important. Just because like the speed of it coming in and out is what matters most. Like if you whether that you have that cash in hand or you don't.
Yeah.
Yeah. It's either you do or you don't.
Yeah.
So let's say a business create like this forecast so that they can pay attention to like potential gaps in their cash flow. What would you say is the first thing they should be investigating? Whether that's should it be expenses or should it be revenue first?
So end of the day, if your business is making the profits on the profit and loss, it means that you already overcome the part of the break-even point. So now it is the matter of like how fast you convert it into like from the revenue into cash. So the speed of collect the cash, hit the bank is very important. You need to see how long is your account receivable and cash cycle look like.
Right.
And that is part of the ratio that you need to analyze on your balance sheet. That is how many days that you convert from your account receivable into cash, and how many days that your cash cycle actually moves through the cycle.
Right.
So that is where you need to take a look into to figure out what is the real problem is going on with your situation. And then the other thing is like product based and e-commerce always have a problem of inventory.
Right.
If you order a ton of inventory, your suppliers need you to put the money into for them to get the inventory for you. But then like whether it's the speed of you sell the inventory and turn it into cash is actually very important. And that is why the ratio of inventory cycle turnover is important too.
Yeah, that inventory cycle is basically part of your cash flow cycle as well. Yeah. So we were just talking about like the incoming cash and the speed of it. I want to talk more about like getting paid faster. Like what are some techniques that business can do to deal with clients or other businesses who are like kind of dragging their feet when it comes to like paying that cash?
So I mean, like this is part of your contract, but of course, like if you go into like big retailers, your negotiation powers is very low. So you need to find a way to the standpoint to make the negotiation is number one. Number two, in business and in finance, we always say like don't put everything in one basket.
Right.
And so you need to like allocations, the portion of your money need to come from certain channel, like whether it's from the retail or is this from your website direct sale. If you from the direct sales to Shopify or something, it's probably will deposit for you like next day. It will like super helpful, and that is why sometimes you will see like many product when they just started, they not go into like Sephora, Target, or like this big play, but they need to sell directly to the consumer right away. They can get the cards coming in.
Right.
So the ability for you to allocate where is the channel that will give you the cash. And then eventually, like, of course, when you have a better cash flow reserve, you can like build more going to the channel.
Yeah, where you'll be able to afford like having that slower cash flow from like bigger retailers.
Yeah. And then also like customer, like, I mean, like the negotiation, but if you sell directly to consumer, that part is not going to be like delayed in terms of the deposit at all. But if, of course, like on the service space, totally different thing, but that is part of your contract. You need to put it in like due upon the receipt or something like that. So it's make the process convert to cash is faster for you.
Yeah. And obviously your business is a service-based business.
Yeah.
When it comes to like, if you were looking for like cash from clients to come in a little bit quicker, like you would have to negotiate with them to.
Yeah, in the contract. Yeah. And I don't have a lot of receivable at all because it's part of the contract that if you don't do it, don't do it.
Yeah.
So,
That's
of
it.
course, there's so many like situations that it's just not like always straightforward. But end of the day, when you run a business, you will need to understand what you can do at that moment, at that stage of your business too. Because of course we want to win everything and go big and all of that. But then end of the day, what will help us to stay on the foundation and on the ground? And what is the principle that will help us to make that decision? The thing is, the first couple months, first couple years of your business is the goal is not become like $20 million revenue company right away, but it's maybe like how you can stay on the market long enough so your customer, your client know your brand, trust in your brand, and you build the foundation in your brand. If that's the first priority of your business, then your decision in terms of cash also need to come with it.
Right.
Yeah.
That makes a lot of sense.
Yeah.
So like when a business scale up to like dealing with big retailers, obviously those come with like bigger contracts as well.
Yeah.
Do you feel like in that type of scenario, asking for like a deposit, would that hurt the contract or the relationship?
I think it's just always just the part of the negotiation. The people always can require some certain deposit. But I know that in the product base, all the category right now is like overflow of the number of product. Like it's the similar function of product. It's just someone also have a similar one to serve the same solution or something like that. So the power of the negotiation is not in terms of like the function of the product, but maybe like whether you actually have a bigger reach in your brand or like because it's people trust in the founder. Whatever the message that you come with it. That maybe create the connection and build a community. And that part maybe one of the way that help you to like have a standpoint in your negotiation.
That's true.
Yeah, but we cannot say for every business at all. It depends a lot of your business, but you will need to understand a lot of your value propositions and what is your community and the standpoint on the markets to be a part of your negotiation. It's not straightforward in terms of math all the time.
Yeah, it's definitely a lot about positioning and then being able to leverage yourself so that you can get a better contract for yourself. Right?
Yeah.
So we were just talking about like how we get incoming money or cash a little faster. Let's talk about managing our outgoing cash as well.
Yeah.
So what can businesses do about expenses if they're always tight on cash?
So in your spend, of course, there is a different type of spend. For example, utility, you can't negotiate.
Right.
Yeah. Otherwise, your electric will turn up.
Yeah.
So that is not really negotiation. Your rent cannot be negotiation. So this thing, you need to categorize what type of spend. Anything that give you the flexibility to make the negotiation. If anything you can't, you can't. And that is why if you have a cash flow projection, it's just absolutely important because it's help you to understand what the fixed spending will going out that you have no power to negotiation. And then the other thing that happen, the negotiation standpoint, then you can like, okay, make some flexibility over here to like help you with navigate the cash flow situation. But you need to map out the cash inflow and cash outflow so that you can navigate the situation so much better.
Yeah, I think just having that map is able to help you like pinpoint where you're hurting at specifically. Yeah. And obviously for utility and stuff like that, like it's pretty non-negotiable. Like you can't lower the price. But I think do you think there's an option where people go into like a payment plan for those sort of payments, or that's not really an option as well?
Yeah, it depends a lot. Like for example, if you buy the equipment, there's a financing option, and if you buy the equipment, it's like 20,000 or 30,000, like a big chunk of money. There's a financing option, and you can arrange the payment plan with it too. It depends on like how is your financial situation, and you can negotiate with it. The other thing is some of the new business owners nowadays, they partner with their vendor in the way that they grow, their vendor also grow.
Oh, okay.
So they have a mutual understanding. It's kind of like partnership. I help you and you help me so that we can grow the business together. So those situations so much better. If I'm just small company and I go to the vendors that is so huge that my quantity of orders. It's not by anything changed in terms of their revenue and their profit.
Right.
They will definitely not play my negotiation capabilities like in the same way that they do. But if I come out to you, like you also like start a company like 1-2 year or like young entrepreneur, the same stage, I can talk to you, say, hey, this is what we face this challenge, and you understand it. You also like, okay, this is what we can do.
Right.
And we build and scale together so that I win, you also can win too.
Yeah. I feel like, yeah, that's really good. I feel like just looking for those scenarios where it's like a win-win for your business as well as like your partner, that would be really good for you. And it just kind of helps you scale in terms of like growing your business and then getting you to that position where you can actually leverage with bigger retailers as well. Yeah. So I think that's a really good technique. So just look for win-win situations within your business.
And there's always like people say, oh, every market is mature everywhere. People like big corporation. I mean, like they're always the number of new business start every single day, every single month are a lot. There will be non-stop new business going to the market for any reason. Even we say that the market is like matures and everything, like there's no space for other people, but they're non-stop of the people coming into the market. And that's just why if you can find these people that become a peer, a partnership with you to grow the business together, you always can find amazing people that do the business. There are always people out there. So
yeah, I feel like this kind of goes a little bit off topic, but like just like the power of networking and being able to leverage that is like a very powerful thing, because like you're not really shelling out a lot of money or your cash in order to like make these relationship with people.
I just see one of the video, Ellen Fisher or something. She started her business with $350 in the bank. That's just enough for her to set up a booth in the Seoul. That's $350. And she came home, she like draw some like the idea, and she get two other people help her to put the idea together. It's just 4 pieces of clothing to attend the show. $350.
Right.
But on that show, his show is I think like $4,000 or something.
Oh my God.
Worth of the revenue. And then like next month, a couple months later, they invite her to like another show. Now she have a little bit more money. So then she like hire more people and get more people to help her with like bring from the idea into the product. And that show, she sold $40,000 worth of revenue.
That's insane.
There's no perfect way to start a business, but if you have the idea, you have the passion, you have the vision for it, you just need to go with it, and you find a way that like partner with people, gather other people, and share the mission. That's why I think it requires different type of staffing and employee and partnership too.
Right.
But that's just why like the entrepreneur who grow the business, they understand it. Start from like $0, like $350. They understand it, what it actually take when you just start like with bare minimum. And that's just why other people can support her, because they understand that part. But it's because she had the talents and she had the vision. Then when people support it, it just make it become like something successful.
Yeah, that makes a lot of sense. So I think if you're getting anything out of this, just like be resourceful, like explore every option that you have. You know? Yeah. Even like people who start out with just like $300 are able to make it. And like the solution is not always getting more cash, but just like taking advantage of all the resources that you have.
And that is absolutely right. I actually had one time I talked with a potential client, and I think she was in wellness industry to create a product for I think like cosmetic or something, exactly the product. I don't remember. We shouldn't say exactly what it is. But she in the commerce and wellness industry, and she started with like $1 million in cash.
Okay.
She ended up with a situation that she has $650,000 in debt.
Oh my God.
And that's just so one thing. And I don't mean like we make adjustment towards like all the decision, but that is why more cash doesn't convert to the success of the business. It doesn't. Of course, it's beautiful and more like a fantasy. If you have a cash in the bank so that it just give you so much peace.
Yeah, and room to work with.
Yeah, room to work with. But it's not guaranteed a success at all. But why would there so many people like, for example, like Ellen Fisher's that she start with like $350 and it converts into something like now big brand and a big company. But I mean that's is what it is. It's just like I require a lot of resource for and be where you go and find the people actually support and rooting for you.
Yeah.
Yeah.
I think, those are not talked about enough. Obviously, every business like worry about their cash flow, but like there are definitely a lot of resources you can take advantage of.
Yeah, you're creative or you become like resourceful, find a solution within your risk and within the people that you can connect with. It's not always the fancy consultant, advisor, and all that. Of course, if we can, it's beautiful to have.
Right.
But it's not always like a must to the success of your business at all. So.
Yeah. Okay. So let's bring it back a little bit into cash flow again and how we can solve the issue of cash inside your business.
Yeah.
So I think a common question a lot of people think about is like, what are some ways that you can cut costs within your business, but like still kind of retain the quality of your product?
Yeah, so that's a very important question to say. Like, you need to understand the quality, what's contribute to the quality of your product. And one of the things is, I think like there was a research years ago about why some brand never like become successful for a very long time and it's not die through even like technology change and industrial revolution and all those things. One of the key factors that help them to sustain their brand is they meet the expectation of their customer. So it's mean like whatever you buy that product internally, you have a certain expectation of that product for you. But if my products to give to you, it doesn't meet your expectation, you will not coming back to my brand and my company at all.
Right.
So you need to know what is the factor, what is your commitment to deliver to your customer and meet them and their expectations. So that don't negotiate in terms of the quality on that part. And then in the business, we always have what fixed expense, which is like whatever it is, like rent, utilities, or anything that bare minimum. But of course, the leaner you are in terms of like operating expense, the better it is because it's not going to eat a lot of a chunk of your operational cash flow.
Right.
So like trim all of that and make sure that it's very lean. It's not like something that is so nice to have. Of course, we all love to have a fancy office.
Right.
Like everything fancy and looks so on brand. but sometimes when you just start a business or even a couple years into the business, it's not necessary at all. And so know where is the bare minimum or the on point that you need to maintain for your business. That is very important. Right. And don't get it tried by social media. that make you make the decision in your business based on what people projection on the social media, maybe that make you spend too much money on the thing that not necessary for your business.
Yeah, definitely. Like social media is a powerful tool, but it can also like influence you to wanting to present yourself in like a way that you can't really afford.
Yeah. Like projection into something that you actually not. And to be honest, I watch a lot of business. There's so many business, they don't, like the founder go on the video, they don't look anything fancy at all. They are not. And the business is still very successful. So it's maybe like your product quality, maybe your message, maybe your community. What is the factor that actually will be the key for the success of your business? And it doesn't need to like everything look fancy all the time, unless you're always just billionaire client, millionaire, different segments. totally different thing that you need to do.
Yeah.
But if you're not in those segments, you don't actually need to be that way all the time. Yeah.
Yeah. So let's move on to finding capital for the growth of your company as well. So there are businesses who need like an insane amount of capital just to start an order for their products. So what would you say are some ways that a business can like find this capital or like fundraise for themselves, whether that's like through funding or through loans? Could you just list out some possible?
Yeah, I mean, like one of the things in many business when you started, because you don't have a financial records of your business on to show anything, to get financing and to get the first investment. So most of the time, these founders basically like side hustling something. They do something else. Like Sarah Blakely, she sell fax machine for a while.
Right.
While she work on Spanx. And or like Jim Short, guy, he still deliver Pizza Hut or something. Why won't he build Jim Short?
Right.
So it's just like the matter that you need to get the cash flow coming into your business while you just start building it. It's side hustling. And of course, these things require a lot of your time and effort. I don't mean that you need to glamorize on hustling at all.
Yeah.
But if you had a lot of vision and mission and passion toward the thing that you want to do, sometimes we just need to sacrifice that period of our life to be like hustling a little bit. But that is the starting point. And some maybe raise the capital among the family, a friend.
Right.
That they can give you borrow $5,000, $10,000 or something to start with. But once your business make a proven record that you can make the profits, even that 10,000 profits per year or like 50,000, whatever it is. But if you make a proven record that you can make the profits, there may be the option for you to get like credit line from the bank.
Okay.
Maybe get the loan from the bank or maybe like SBA loans or something like that, it's like similar, or get the grant. And then after that, if you want like more fundings, maybe you get angel fund investor or raise funds to like venture capital, like Series A, B, C, whatever it is. But that's go with the financial record of your business.
Yeah. I think you can start exploring those options once you hit like a little bit more, couple more years into your business already, or like when you hit like a mid-size for your business. So you can start exploring the funding from like banks. But yeah, I think the starting out story is like one of my favorites just because there are like a lot of like successful business owners out there. Like, but like you don't, that is like their life right now is like super inspiring and like you want to be there. But like they have had a period of their life where like it was not glamorous.
Yeah, I remember Sarah Blakely have at the photo, and I'm so impressed on this woman. So she was driving, and someone basically called her, talk about a contract or something, and they gave her the phone number. But because this is on the middle of the road, she didn't have even a piece of paper to write out. So she basically get her lipstick, and she was a Scot, and she like write out the phone number on her tie, on her leg, with the lipstick on it. That's just to show how much of the work are coming in and how much that your commitment to your vision and your mission is like huge. It's not gonna be like, okay, I will like, can you send me an email? And back into the day, like email or like all other things is not like today at all. But she like get her lipstick and she write the phone number on her leg. To be honest, it's super impressive in terms of like how much that you actually become like visual for and just act on the moments that it's really quick. And the guy that who found the gym shot and now they $1 billion business.
Right.
And he was like deliver the pizza and then he buy the sewing machine and he come home and he's like cut the material, actually sew the clothes together. And that's just like the level of like commitment that you going into like pursuing your mission and your dream. And of course we always dream that we can have a trust fund, so money to start with. Our parents can give us the money, but that is not always the case at all.
That's true. Yeah. I think, yeah, I just love those stories that like, so like it does take sacrifice in order for you to reach the success in your business.
Yeah.
Um, so our next section is some common cash flow traps, like people common mistakes as well.
Yeah.
Let's talk about what not to do. What are some common cash flow traps like businesses fall into?
So one of the things in the product-based industry is the inventory, whether like you actually order the inventory just enough. And that's why I think in Japan they have the concept just in inventory. I think so. And this is from like Toyota or one of the maker company that actually have that idea that you just order inventory enough for you to like actually move into the production. That is not everything is just sitting there. It wastes a lot of cash because inventory it needs to be turned into sale, and then after sale it turn into cash. Then you have the money into the bank. But in product base, if you have a too much inventory and the moving of your inventory is slow, it's basically your cash just sitting there in the inventory. And then I think recently, like with e-commerce, they have the concept called drop shipping.
Right. Drop shipping.
But that's also very need to be very careful in terms of like whether it's on the brand with your business and the quality of your products. Because if you don't have that, you don't control in terms of quality of your products, you will travel like you lose the client at the end, a customer at the end of the day. And then like also depends on the industry too.
Right.
Like I think like in the stationery or like planners are all the things that relate to the paper. They can outsourcing the operational of it. Like when you get the orders from your website, like Shopify website or something, it flow the information into the operational company that only specialize in operation. So they take your product and they move it through the printing process and they take care of the packaging and deliver and make it shipment to the customer. But when you outsource the production and operation, is of course they will eat a chunk of your profit.
Right.
So it just depends a lot in terms of how you want to manage this. But you can see like a lot of brands on the market actually don't operate their operational in terms of like stationery industry. They don't own it. Some companies, some manufacturing, they actually specialize in operation. And these brands, they just outsource that part.
Yeah.
And they share that profits into. So it depends a lot in terms of your industry too.
Yeah, that's super true. Just like understanding the supply chain and like knowing who you're manufacturing is pretty important when it comes to
In the product base, I think the supply chains management is one of the most important thing because it's make it or break it, the quality of your product and the ability for you to actually deliver that product that you sold.
I agree. Yeah. Just like understanding that is like having control over your company basically.
Yeah.
So how can a business tell if they're over investing in inventory? Like
so in terms of financial, we have the inventory turnover ratio. And if you actually have that on hand, you manage how many quantity of your inventory in your stores, and then how long it take you to actually convert this thing into the cash and it go out of the shelf. It help you to know, okay, whether it takes so long, how many days it take for you to move this inventory. And if this take long, it means that you overstock in terms of inventory or because your product is not like attractable to your customer, whatever the reason. But once you have this number, you track it, you find the reason behind of it.
Right. Yeah. So just keep focusing on your inventory. Try not to overextend yourself too much in your business. Can you think of any other common traps off the top of your head?
The part of negotiation with your vendor also like very important too. Number 3 is, of course, we all optimistic when we go into the business. There's no one go into the business with like not optimistic at all. Otherwise, we go work for someone else.
Yeah.
Because we take the risk and we need to have our optimism to actually go into the business. But always very like aware of what is your financial status, and hiring people needs to go with your operation and with the growth of the business. I I see so many times the business like, okay, the market's like not doing well and they need to fire all of these people or let go all of these people because they don't have work for these people to do at all, their staff employee to do at all. So make sure that you understand the larger scale of the macro economy. Also understand your customer. Because it's sometimes like the industry of like print on demand, like there's a hoodie, a sweatshirt or something that have a
graphic on it.
Yeah, graphic on it. It's very easy to start a business also, but it depends on like why I need to buy it from you, not buy from another person. What is that make yours different? If it's the same cotton t-shirt and I just change what is the graphics on it, then what is actually the difference? And if there's no value proposition on that part, if you hire so many people on your team to make that production, but then your customer not coming back on that part because the economy is tough and they need to take care of their grocery budget more than like buy a t-shirt, then your business will be in the trouble. The barrier of entry into the business world is very low these days. Everyone can start a business, but actually to be really successful and understand every single part of it, it requires a lot of understand the principle and very aware of your business state at its goal day by day.
Right. Yeah. And there's like a bunch of YouTube videos and resources for you that show you how to like open your business and how to get started and like what paperwork you need.
Yeah.
But like, I feel like learning those principles, like the ones that we show on our podcast, like we should focus more on the principle and like why you should focus on these things in order to like keep your business afloat. Like, just start your business and like what you should be doing.
Yeah. So the practice, I think we all can watch. If I can spend like a week on YouTube just to watch all of these things, we all can do that because nowadays information become like everywhere.
Super easily accessible.
Yeah. But like the ability to convert this information into the practical and actually do it day in and day out, move your business forward, it actually require a lot of like understanding the skill, strategy, and really go into the trenches every single day to move it forward.
That's true. Yeah. That's something you don't always think about.
Yeah.
But yeah, cash flow issues are super scary, but they're manageable. Today, we just gave you some principles you should take into account whenever you're struggling with cash flow or just looking to improve your cash flow in general.
Yeah, running the business is not easy like walking in the park. But as always, we on our podcast, we want to give you the practical principle to help you to navigate this decision. And I hope it's just like super helpful with your entrepreneur journey. And so if you have any questions or recommendations or rating a review to us, please let us know. And we appreciate your time on our podcast. We're looking forward for the next couple episodes. Thank you so much.
Bye now.
Bye.